Hello traders, this is Frank Paul from Forex Mentor bringing you this latest complimentary weekend video presentation which we've been running for quite some time now, offering some thoughts and ideas and things for you to consider in relation to your own trading if you need it, profiling as well the Fibonacci Swing Trader course and service, which is all predicated on a trading method we call parabolic SAR triple screen. Quite a mouthful, but really it's quite a simple concept when you strip away all the verbiage. And so on tap for today, what we're going to do is show you yet again another example of how to scale down this method, in this case to trade the news, looking for a 20 pip scalping opportunity. And the example in question pertains to Aussie US, and by the way, this was replicated on a large number of pairs, in case you don't know by now. On Friday, June 29th, this one, a 5-minute chart entry signal at 12 p.m. GMT, which is equivalent to 8 a.m. North American Eastern Daylight Time. The news in this case was, well, it came out several hours prior, but it was a so-called surprise agreement amongst Eurozone officials on a banking recapitalization plan, which resulted in a sharp reversal. Euro US had been coming down, Aussie US, Pound US, the yen crosses, the Aussie base pairs, etc. And so the news came out, I think it was just around midnight GMT, Friday the 29th, and that just sent the markets skyrocketing, or tanking, depending on how they're paired, of course, but in this case Aussie US just skyrocketing. And so again, that was unscheduled news, it was market moving news, and it was seen as Eurozone positive, which allowed people to unwind some US dollar positions, the idea being flight from safety back into risk, so everybody's all of a sudden breathing easier and going long the euro, the Aussie, everything, going long everything except the US dollar. And so that was the move. A very volatile situation, very fast-moving markets, very hectic. So you're aware of that whole scenario by now. But the point is, whatever the news was, and however the market was choosing to respond to it, you didn't need to sit there and read article after article and look at so-called fundamental analysis of the day. None of that was necessary. The momentum system here that we're using told you which side of the market to trade. So here's some details if you want to follow along on your own chart. Now the market ended up going much further than the 20 pips we were looking for a scalp, but the point is that's easier to see after the fact rather than in real time. When it's just a really hectic, volatile situation, it makes sense to book profit more quickly. So it was only a 20 pip scalping trade opportunity, and it worked out just fine. But the point is, you know, I don't know that it was possible to predict the full extent of that sharp reversal. So don't feel badly if the market actually moved another 60 pips beyond where we were looking. Again, that's easier to see after the fact rather than real time. But that's what we're dealing with here. Scalping a sharp reaction to news into Friday, June 29th. Now, just to reiterate the trading method, the triple screen methodology is predicated on finding the same parabolic SAR reading on 3 consecutive time frames. And those can be any 3 time frames. The only difference it makes is in terms of suggesting the scale of the trade. If we found the same momentum reading on the monthly, weekly, daily charts only, that would suggest eventually a position trade possibility, which is very different than if we find the 3 consecutive time frames comprising, let's say, the 4-hour, 1-hour, 15-minute charts, as will be the case here. A very different scenario in terms of the size of profit target, size of protective stop, so on and so forth. But 3 consecutive time frames giving us the same parabolic reading. Above price bars is bearish, below price bars is bullish. We then drill down to the next lower time frame after validating that indicator reading by finding market flow aligned in the same direction on at least one of the 3 time frames in the triple screen. So then We drill down to the next lower time frame, find evidence of a low-level correction there, denoted by a contrarian or counter-trend parabolic reading on that time frame. So let's say we've got green dots on the latest bar on the 4-hour, 1-hour, 15-minute charts. We're looking for a red dot as we drill down to the 5-minute chart, as but one of a number of different examples you could come up with here. And we're looking for that contrarian parabolic reading to confirm a retracement. So in an uptrend, we're looking for a pullback from a swing point high. In a downtrend, we're looking for a corrective rally from a swing point low. And when the contrarian parabolic reading on that lowest time frame flips into alignment with the triple screen reading after the fractal retracement, you have a potential entry trigger. So again, just to reiterate, here are the 3 time frames that we're looking to line up the same momentum reading on: 4-hour, 60-minute, 15-minute charts for today's example. Again, it could be anywhere: monthly, weekly, daily for a position trade, weekly, daily, 4-hour for a swing trade, daily, 4-hour, 1-hour chart for a day trade, so on and so forth. So with that introduction out of the way, let's take a look at the chart rundown and see how it was possible to grab a piece of that sharp, unexpected move in the aftermath of news Friday, June 29th.